If you would consider yourself somewhat newer to dividend growth investing and you're trying to build out a long-term dividend growth portfolio that's not only going to grow over time, but also pay you dividends every single month and or quarter, and also over time pay you more and more in dividends as time goes on, compounding your portfolio to a massive size in the future. Well, if that's something that you're personally trying to do as of right now, in this video I'm going to explain to you and show you exactly why I think newer dividend growth investors should specifically stay away from single stock picking and only buy high quality dividend growth ETFs, at least until they get very familiar with trading. So like I said, if you're currently looking to build out a long-term dividend growth portfolio like mine here on the screen that currently pays me over $6,000 every single month of dividends, make sure to drop a like down below and let's get right into this one. Real quick, for those that haven't already, make sure to go to the first link in my description and grab my new dividend investing ebook where I share exactly how I went from $0 invested to now earning over $6,000 on a monthly basis and over $1 million invested in the markets. Along with the ebook, you're also going to receive my custom dividend tracker where you can track your dividend progress on an ongoing basis and reach your dividend investing goals. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. Now, the main thing that we're going to be talking about in this specific video is the fact that I personally think it's a much better idea for a newer investor, relatively newer investor, someone that's only been investing and looking to build out a dividend portfolio, let's say within a year or two, that newer investor specifically spends the majority of their money on different dividend growth ETFs across the market instead of single stock picking. Now let me explain first of all, what is an exchange traded fund or an ETF? So an ETF is basically a pooled investment security that can be bought and sold like an individual stock. ETFs can be structured to track anything from a piece of a commodity to a large diverse collection of securities or stocks. Now just pause for a second. When I first started investing, building up my long-term portfolio in my early days, I definitely did not take my own advice that I'm talking about in this video, and instead of buying well-diversified, high-quality, low-cost ETFs or exchange-traded funds, I instead, for whatever reason, thought I was smarter than that, and I was single stock picking, and because I was brand new to trading, I was buying tons of horrible single stocks at that. Now, I'm by no means saying that you watching this video are bad at single stock picking. I'm sure there's some single stocks in your portfolio that have done quite well. But building a portfolio initially, setting the groundwork, building a foundation of high quality exchange traded funds is going to be superior. Now, more information about ETFs. It says an exchange traded fund or ETF is a basket of stocks that trades on exchanges like stocks do. The prices can fluctuate, it can be bought and sold, etc. And one thing that's great about ETFs is the fact that they offer a basket of stocks. They're diversified, but on top of that, they're very cheap. And with that, the diversification can bring with much less risk than putting all your eggs in one basket and buying single stocks right at the beginning. So at this point in the video, I hope that you're sort of understanding what I'm saying. The idea is basically to build a foundation. Think about it as a house. Building a foundation in your portfolio of different high quality dividend growth ETFs that are well diversified, professionally managed at that. And then after you build the foundation of your house, if you want to decorate some of the walls and add some single stocks, splash in some single stocks here and there, I personally have no problem with that. The other thing that you might be asking is, well, what different high quality dividend growth style ETFs are you even talking about? What are some decent options? Well, don't worry, I have a ton to go through here. You might want to save this part of the video because this is going to be very useful later on, and definitely do your own research on every single one of these to see which of these are going to offer exactly what you're looking for. Now, some of the names that I think are super high quality, not limited to all these are just a few of them. Things like DGRO or the iShares Core Dividend Growth ETF. And side note, I go over all these on my channel quite often, so subscribe, check out my other videos. Another super high quality dividend growth style ETF, which I think would be an amazing foundation for a long-term dividend growth style portfolio, is something like VIG or the Vanguard Dividend Appreciation Index. For another example, look at how this thing has performed over time. This ETF over the last 18 or so years is up 253%, but on top of that, it's paid dividends to investors every single quarter. Or even buying into something like SPY. I know it's boring to buy into the S&P 500 in your early days. You want to start stock picking, you want to have fun, you want to make massive returns, I get it. But building a foundation in your portfolio of different names like SPY, like VIG, it's going to work wonders long term in the background, as these different high quality style ETFs are going to be compounding while you sleep over the years. And again, if you want to take a small amount of cash balance on the side and single stock pick, nothing wrong with that. But building a foundation of names like VYM, the Vanguard High Dividend Yield Index, or like the other ETFs we went through, are great options. But it's not just those. We also have names like DGRO, the iShares Core Dividend Growth ETF, SCHD, one of my favorites. And the great thing about building your foundation with some of these different high quality dividend growth ETFs is that they all offer different things. Like for example, SCHD offers a higher starting yield. So if you're an investor out there that wants your portfolio to go up over time, but you're also concerned about having your portfolio generate a lot of dividend income in the future, there's different foundational high quality dividend growth style ETFs across the market ready to be purchased that offer basically exactly what you're looking for already. Now, according to investopedia.com, it says, what is risk tolerance? Risk tolerance is a degree of risk that an investor is willing to endure given the volatility in the value of an investment. An important component in investing, risk tolerance often determines the type of amount of investments that an individual chooses. Now, this is a very important thing to think about, especially in the early stages of your investing journey. You have to really talk to yourself and think hard and long about your actual specific risk tolerance. Now, this has nothing to do with what another investor's risk tolerance might be. You have to ask yourself, would I consider myself more of an aggressive investor that's not really all that afraid of taking higher risk? Or would you consider yourself more of a conservative investor that's not really willing to risk your money, even if there could be a higher outcome? Now, for me personally, I would consider myself not all that much of a risky investor. I like to take the slow and steady route, and I'm willing to shave off a few percentage points of possible potential returns in order to have a less risky portfolio that helps me sleep better at night. But there are other investors out there, even some of my personal friends that I would consider much more risky investors. Now, those type of investors might be willing to put their money at risk a lot more often than I am, and because of doing so, they might have higher potential upside. But risk tolerance is a very important thing to think about, and I would really like all of you to think long and hard about what your true risk tolerance is from day one. Now, sharing with you guys some examples of me doing this in my long-term dividend growth portfolio. As you can see right here, I have a portfolio made up of around 40 different positions. Some of these are single stocks, some of these are different ETFs. And again, this portfolio, my portfolio, is by no means perfect. There's lots of mistakes within this portfolio if you look closely, and there's lots of different stocks or ETFs that I absolutely nailed over time. But there's different foundational positions in this portfolio. Again, names that in the background are going to compound over and over again over the years. Things like my 1,000 shares of Apple stock that I purchased years ago at an average cost of around $118 per share. This is a foundational position. So even if I buy X, Y, or Z stock or ETF and maybe they don't perform all that great, I almost know for sure, I can't know for certain of course, but I almost know for sure that Apple in the background is going to compound year after year after year. There's also different names in the portfolio like the Schwab US Dividend Equity ETF or SCHD, which I currently have 608 shares of. Building strong pillars in your foundation is going to help your portfolio, especially if things get rocky later on. Now, along with that, like I said, I have no problem with purchasing some other fun names, maybe some high yielders. Like for example, I have 311 shares of Altria Group, which honestly, let's be real here, I'm buying Altria for the yield. There's also some riskier names in here that I bought with a small amount of money, relatively speaking, as sort of a gamble, like my 255 shares of TSLY. But overall in my portfolio, I'm really looking to build a strong foundation of different dividend growth ETFs that are going to make up a significant portion of the portfolio and is going to hold the portfolio up and help it compound long into the future. So now that I explained to you guys exactly why I think purchasing dividend growth style ETFs, high quality ones at that, like the ones that we talked about in this video earlier, now that we talked about the fact that I think that is crucial and a great idea, especially if you're just getting started off investing, I want to hear from you guys down below. Out of all of the dividend growth style ETFs out there, if you were to choose to hold on to one forever in your long-term dividend growth portfolio, which one would it be and why? Drop the ticker symbol in the comments down below. If you enjoyed this video, make sure to please drop a like and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.